The coronavirus outbreak and the threat of a global pandemic has taken all the headlines the last couple of weeks. We're looking not only at a local problem, we may be facing a global problem. The stock markets have also reacted negatively, obviously, and we are sensing a little bit more nervousness amongst our investors. In fact, we have received more than a handful of calls and emails from investors who are asking us the basic and simple question: how will a global pandemic like the coronavirus affect my investment in wine? And there are no short and conclusive answers to that, but we can only say that if a global pandemic will have a negative effect on our global economy and also the stock markets, it makes sense to sort of look back on how wine as an investment have reacted to situations like this one before. And in the last 16 years, which is what we have data for with regards to wine, there has been 4 small or large bear markets. There was the financial crisis, obviously, and since then we have had 3 periods with more than 10% losses in the stock markets. What is in common of all these 3 periods is that wine and the stock markets have not been in any way correlated, at least not conclusively. This means that during some of these periods wine have risen in value and during others they have fallen. And most recently, during the last 5 months of 2018, wine actually gained 7% while the stock market lost 13%. This doesn't mean that wine will be contrary to the stock market, but it just means that wine does not necessarily go the same way as the stock market, and in short terms, if the stock market will give you losses, there is no reason for the wine market to do the same. It can, in other words, go both ways, but most likely it will be steady. This means that if you are one of our 400 investors who already invest in wine, you can be happy about at least that your wine portfolio is better protected against a potential crisis or a potential recession that we may be looking at in 2020. It doesn't mean that wine is better than stocks or anything else, but it just means that if we are here in the turmoil and stormy weathers, wine will provide you a much, much safer investment than most other asset classes will. Of course, you can always go cash, but going cash means you're not invested, and we're talking about investment here. So what should I conclude from this? No one knows what 2020 will be like, but if you're fearing anything like a global recession or a stock market mini crash or even a big crash, you should consider how you invest, and you should consider wine a safer haven than most other asset classes. So I hope you can use this for something, and I hope you'll take notes. We're very, very open to questions, which we'll try, if they're relevant for everyone, to answer to everyone. You can use it here, or you can send us an email. While this is a potential catastrophe, let's not forget that the real catastrophe are the human lives we're losing. There's nothing more valuable.